Jerome Powell yesterday said that stocks are richly valued, and that kind of caused a little bit of concern, a very brief concern in the markets. Yeah, everybody's like, okay, stocks are overvalued, I'll sell some today, buy back tomorrow, and that's what they're doing this morning. But again, Jerome Powell saying stocks are richly valued here, and he's right. But here's what you need to know before the bell this morning. Yesterday, markets, it's kind of weird because markets were red yesterday, and I know that doesn't ever happen anymore. Fortunately, futures are up this morning, so whatever little bit of sell-off we had yesterday is going to kind of rally back today. But we did see a little bit of a sell-off yesterday. No big deal. Markets are overbought, kind of worked off a little bit of that overbought condition. Again, futures are set to point higher this morning. Really no news to speak of at this point, but kind of the sell-off yesterday was Jerome Powell's Alan Greenspan moment. Now, I know a lot of you listening to the show this morning aren't old enough to remember Alan Greenspan, but way back in the day, before the turn of the century, there was this Fed chairman called Alan Greenspan, and he said that stocks are irrationally overvalued. And of course, this was about 1996, and markets just kept on going higher until we got to the dot-com bust. Well, Jerome Powell yesterday said that stocks are richly valued, and that kind of caused a little bit of concern, a very brief concern in the markets. And again, everybody's like, okay, stocks are overvalued, I'll sell some today, buy back tomorrow, and that's what they're doing this morning. But again, Jerome Powell saying stocks are richly valued here, and he's right. And if we take a look at valuations really across the board and what people are paying for stocks, they are richly valued on multiple fronts. But again, nothing really wrong with that for right now. The trend remains very positive. Technically, there's no signs of distress, nothing to be overly concerned about. But again, we have these very big gaps between where markets are currently trading and the moving averages below it. Those will eventually close. The question is what causes it when, which is why it's important to continue to navigate your portfolio and manage risk accordingly. But right now, there is nothing disrupting the markets to a large degree. There's no real big concern. There's no upcoming data that looks to disrupt the market at the moment. So again, it's okay to continue to kind of ride this market, but just be very aware that we've got very, very compressed volatility here. And the problem with compressed volatility is that that's what gets you into trouble from time to time. And we are starting to see volatility creep up here very, very slightly. Again, not a warning sign just yet, but that increase in volatility, and you're on a buy signal right now, that something breaks in the markets, you're going to get a very sharp pop and a very sharp sell-off in stocks. So that's why I just continue to manage risk here accordingly. Doesn't mean, be overly bearish, but there are some kind of underpinnings of this market that could lead to a very sharp reversal. All right, that's what you need to know before the bell this morning.